In our today's session, we'll start with insights on real estate trends and opportunities, followed by a Q&A session, and concluded with a brief presentation on home loan and mortgage loans. So please stay tuned till the end for some interesting key takeaways and investment insights for making a more informed decision. To share his thoughts on this complex subject, we have with us Mr. Pankaj Kapoor, founder and managing director of Lazarus Forus. Mr. Kapoor is a seasoned real estate data specialist and founder of Lazarus Forus, India's only non-brokerage real estate research and analytics firm. With over 27 years of experience, he is known for his pioneering work in real estate, valuation, market analytics, and risk advisory. Under his leadership, Lysis Forus has built a robust database tracking over 20,000 projects across 60 cities, offering critical insights to banks, housing finance companies, developers, institutional investors, and policymakers. He has introduced path-breaking models such as urban price setting model and the magnet theory, which have brought scientific rigor to property pricing and urban growth forecasting. Pankaj sir is also a member of Central Advisory Council of RERA. He holds an MBA from the Institute of Management Education, Pune, and BSc in Mathematics from Lucknow Christian College. With this brief introduction, I hand over to you, Pankaj sir.
Thank you so much. Thank you, Girish, and thank you everyone who has joined the webinar. I'll be taking you through the presentation, so let me share the screen. I'm talking about the real estate trends and opportunities across the country, and this will be talking about the builders market across 60 cities in India. So just to give an overview is that Mumbai Metropolitan contributes actually 28% of the supply, followed by Pune. So the top of this presentation, you are seeing the distributions of the market. So top 8 cities across India are the major contributor of residential apartment sales across the country. Altogether, in the last trailing 12 months, we have done a business of 6 lakh 54,000 units, valuing 8 lakh 27,000 crore, and during the period, 5 lakh 22,000 units were launched. So, in terms of the sales, the market remains flattish, but in terms of the value, it has shown 15% growth, and in terms of the new supply, there was a 10% decline. Today's real estate contribute around 6.9% of the GDP, with 82% coming from the residentials and 18% from the commercial segment. During this period, we also have seen a good uptick of the commercial office spaces. So last year, we have in the top 6 urban agglomeration, we have seen a gross absorptions of 73 million square feet. So that's kind of thing which is a summary of the market. Overall aspects to post 2020, after the COVID, when the market seen a decline, we have seen a consistent growth in the market all through the years 21, 22, 23, and 24. And 25, we have seen a kind of a flattish state of the market, neither much of the decline, but the growth on the yearly basis has remained 0%. And the market in terms of the unit is well distributed between affordable and mid contributes the major proportions of the sales, and the luxury supply is also really been increasing in the size. In terms of the cost segments, we have seen the unit costing less than 75 lakhs has shown a decline, and the unit costing above 75 lakhs have shown a growth. And as the ticket sizes increase, the growth percentage of the unit is also ticket size has been shown a more growth. So clearly indicating that the market has been polarized towards the luxury and ultra luxury segment. So that's kind of a phenomenon the real estate market has shown. In terms of the value wise, where we have seen 15% growth even in the last financial year. So continuously we have seen a growth, and in terms of the value, you can clearly see that the market is skewed towards the luxury and ultra luxury. Their contributions to the overall value of the stock sold is very high. Mid, affordable, and priority sectors projects are very, very low. New launches have seen a decline in the last year, although earlier it has shown a consistent growth. And we have also seen a decline in terms of the segment wise, except for 1.5 crore to 5 crore, where we have seen a growth, and above 10 crore we have seen a growth. New launches in terms of the value has shown a 1% decline. That's largely because the 10% decline was there at the unit level. So there is a bit of decline which has happened. Inventory across all these cities are close to 10 lakhs units, where the top 8 cities contribute 8.15 lakh unit, and the remaining tier 2 and tier 3 cities have shown 1,61,000. And there was a 7% decline in the unsold unit, largely because the sales has been higher than the new launches. MMR contribute the highest unsold stock, followed by Pune, Hyderabad, Bangalore, Ahmedabad, Chennai, NCR, Calcutta, and Tier 2, Tier 3 cities. Contribution is 1,96,000 units. But the inventory should not be looked upon from the angle of scare, because the inventory overhang has been very conducive and efficient. So anything which is less than 24 months is good inventory. So even though we have 10 lakh unit unsold stock, but 6.5 lakh unit is getting sold yearly basis. This market is suggesting that it is very efficient and the inventory should not be a cause of concern. But the high inventory and supply is also keeping prices in check. So the price rise has been moderate across most of the cities. And this shows the trajectory of inventory overhang. So once upon a time during 2017-18, inventory overhang across the country reached as high as 50 months. Post that, as the market improved because of the robust sales, we have seen the inventory overhang has been reducing. So tier 1 cities is standing 19 months of inventory overhang, and tier 2 is 17 months of inventory overhang. And this is one of the very efficient inventory overhang. Prices we have seen in the cities of North India have shown a higher increase in the prices. Noida, Greater Noida, followed by Ghaziabad, Gurgaon. Bangalore also have shown YOY growth of 7%, but in terms of the trajectory, Delhi has been also higher sides, and the rest of the market, the YOY growth has been range bound between 2 to 4%. So one thing very clearly indicated that the city where the supply size is higher, the price growth has been moderate, and the cities where the supply constraint has been constrained, we see a more price rise. Across these 20,000 projects, we have seen 63% of the projects have shown a price rise between 0 to 10%. 18% of the projects have shown a price rise greater than 10%, and 19% of the projects have shown a decline in the prices. So the market is highly sensitive to the velocities. Sales is a major driver for maintaining the price productivity. So it's, except for few market where there is a sense of the little bit of a speculation, especially North Indian market, largely because of the limited supply availability. Rest all the country is very efficient in terms of the price rise. So there is no price correction risk because inventory overhang and rental yield is also very good. So this is a long-term trend of quarterly trends of the sales, and which is clearly indicating that we touched the peak in terms of the volumes, and post that from the peak the market has declined close to 7%, both in tier 1 and tier 2 cities. there has been a slight reductions in sales. So market certainly suggested like it is touching its peak. Sorry. But there is a sense of the concern of the market. So this graph indicates the red color is indicating the constructed supply, and the green line is suggesting the marketable supply during the period. Since 2009 onwards, we have seen the marketable supply grew, and the constructed supply also grew in tandem to the market supply. And constructed supply maintained 65 to 70% of the marketable supply, that kind of a ratio. But post 2021, marketable supply has been increasing, but the constructed supply is holding up and not increasing. That's clearly indicating there could be execution risk. There are concerns that there are labor problems and builders are not able to construct as much as the supply they have introduced in the market. So the graph is indicating there is a concern of the executions in the project. So one has to be careful in terms of choosing the projects and the developer. The developer who has good performance rating and the project where the performance of the construction has been good or which are nearing completions are the one which should be considered for purchases. And across all the cities, we have seen a declining ratio of constructed supply to marketable supply, which once upon a time touch as high as 77-75% has come down to below 50% in most of the city. We also try to figure out which are the potential cities for growth. And for that, we have tried to analyze and carry out a more scientific analysis. And the parameter for analysis has been, we looked at two quadrants. One side, we looked at economic infrastructure and investments in the cities, and another, we looked at the real estate dynamics. So there are railways, road, expressway, metro, airport, port, waterways, industrial infrastructure, investments, and population density. They are the one which were considered as a component for economic infrastructure and investments. And the real estate score we developed based on the real estate supply size, price growth, and the rental yield. Rental yield is one parameter which we always say that this suggests the productivity of the prices. The properties where the rental yields are higher, that means the probability of capital appreciation is higher, and the places where the rental yield is low, then there could be a downside risk of the or price correction risk in that particular project, or there may be a prolonged stagnancy. And it shows that even if there may be cases when the rental yield remain low, but the property continues to be growing, and that indicates the irrationality of the market. And most of the times in the North India and some of the cities, you can see these kind of phenomenon. The rentals are not really increasing, but the capital value has been increasing, something like that. So these two quadrants on which we looked at, and then we looked at the Euclidean distance of these two quadrants. So in terms of the tier 1 cities, if you see, Mumbai stands number 1 and the highest ranked, both in terms of the economic infrastructure and investment score, as well as real estate dynamics score. And the tier 2 cities point of view, the Surat stands highest, both in terms of the real estate dynamics and the investment score quadrant. So And in the closer look, if you combine both tier 1 and tier 2 cities, Mumbai is far ahead in comparison to the rest of the cities. That is how it is there. Then now I can take you through about the individual cities and their dynamics. So Mumbai actually has 2,200 projects, 1,500 developers, annual marketable supply 1 lakh 24,000, annual sales 47,000, unsold 76,000. Rental yield is 3.34%. AQI, though it is much worse than what is indicated, but this is a government data, so we have put in that data. And so this is a ranking and the scores attained. So economic infra investments point of view, out of 5, it is scores 3.16. And in the real estate dynamics point of view, 3.94. And it is score higher in terms of supply size in the real estate side, and the rental point of view. Rental yield now has touched close to very conducive 3.44, which is very good. So that is kind of and then it also has good metro connectivities as well as road and expressways development score is also higher. Population density is also higher. That is why it has ranked number 1 and scored the highest. Since the supply size is one of the highest and there's a lot of redevelopment and construction activities going on, although the sales and supply both are still conducive, but it has arrested the price growth, and which has shown a moderate increase all through. And so the CAGR growth of the 3 years is 3.6%, YOY basis growth is 3.2%, and QOQ is 0.8%. These are the ticket size, like less than 1 crore, 1 to 2 crore, 2 to 5, 5 to 10, and above 10. So the locations which have contributed highest sales and the having unsold stock are ranked accordingly based on the ticket size availability in the cities. So these are the top locations. Depending upon the ticket size of the purchasers, he can choose the locations. Hyderabad has around 500 odd projects, 400 developers, marketable supply of 74,000 unit, annual sales is 31,000, unsold is 43,000, and rental yield is 3.19%, AQI 150, and the ranking is given. It has attained in comparison to Mumbai 5.1, 3.9 score. And although the supply size is lower than Mumbai, so then the score is relatively low in the real estate segment. Although the infrastructure point of view, logistic and industrial infra in that city is growing high, and the investment score is also higher. So it has ranked accordingly. And this is a CAGR growth. In last 3 years, CAGR growth is 3.4%, YY 2.1, and 0.4% Q on Q growth. These are the top locations depending upon the ticket size of from 1 crore to 10 crore, different location. And this is ranked accordingly according to the sales and supply availability within the location for the respective bracket of the units. Bangalore also has close to 500 projects, 434 developers, 77,000 units marketable supply, annual sales 35, unsold 41,000 units. It has a rental yield of 3.44 and the AQI 95. So in terms of real estate dynamics point of view, it has attained the same score, but in terms of infrastructure, economic, and investment point of view, it is lower than Hyderabad. And so that's why the logistic and infra has really got the maximum marks and the rental yield in terms of the real estate dynamics. So price growth in Bangalore been CAGR growth of 6.9%, YOY growth 6.5%, and Q-on-Q growth is 1.6%. These are the top locations based on the ticket size. Ahmedabad market has around 967 marketable projects. Number of developer is close to 794. Annual marketable supply 71,000. Annual sales is 23,000 units. Unsold 47,000 units. It has a highest rental yield of 4.34% and AQI 180. So these are the respective scores. And CAGR growth has been 4.1, YOY basis is 3.7%, and Q-on-Q basis 1.2% of the growth. These are the top locations. Pune, which is also second highest in terms of the supply of the market, has around 757 projects, 617 developers, marketable supply 68,000, annual sales 27,000, and unsold 41,000. And it has a rental yield of 3.4% and AQI 135. So it has got a 3.4 ranking. The CAGR growth has been 4.7% last 3 years, YY basis 3.4%, and Q-on-Q basis 0.6%. These are the top locations based on the ticket size of the projects. Chennai has 489 marketable projects for 249 developers. Annual sales is 9,500 units. Unsold is 27,000 units. Annual sales value is 11,000 crore. Rental is 2.85. AQI is 120. And the price growth in the last 3 years been 2.7%, YOY basis 3.2, and Q-on-Q basis 0.6. Kolkata is also emerging as a significant supply city. Earlier, it used to have very moderate supply, but it has matured up when it comes to the real estate market. So it has 552 projects. Number of developers is 453. Annual sales 18, close to 19,000 units, and unsold of 32,000 units. It has a rental yield of 3.93% and AQI 160. And the last 3 years CAGR growth in the prices been 4.6% with the YY growth of 2.8 and Q-on-Q 0.7%. These are the top location in terms of the sales and supply. Delhi per se doesn't include the Gurgaon, Noida, which has been considered as a different cities. Those are tier 2 cities. Delhi does not have much of the builder supply because of the lot of restrictions being put by DDA. So they have just 30 projects, 23 developers. Annual supply is 5,300 units. Annual sales are 2,000. Unsold is 3,200. and the rental yield is 2.58%. AQI is 315. Because of the low supply size, it has ranked lower, but the price growth has been among the highest in that, because 6.8% last 3 years CAGR, YOY basis also 4.9%. Q on Q basis, there's a slight decline of 0.8% we have seen. Some of the projects have reduced the prices. These are the top locations with the ticket size. Coming to the tier 2 cities, Surat stands at top with 400 marketable projects, 352 developers, marketable supply close to 40,000 unit, annual sales of 13,000 unit, and unsold 25,000 units. Rental yield is 4.46%. So among the tier 2 cities ranked the highest, both in terms of the investments, metro, urban transits, and the real estate size point of view. It has scored the highest. And it has shown a 4.2% of the last 3 years CAGR growth with 2.3% YOY growth and 1% Q on Q growth. These are the top locations of the Surat based on the ticket sizes. Second is Navi Mumbai, which is among the tier 2 cities, which has 926. It is probably largest in terms of the real estate supply. And this is actually connected to Mumbai, so it has a behavior of Mumbai both in terms of the sales and supply. And then there has been a good connectivity between Mumbai after the Trans Harbour link. But before that itself, because being in the vicinity of Mumbai, we have seen a good growth over the years. So that is there. So marketable supply is close to 70,000 unit, annual sales 25,000 unit, unsold is 43. It has a rental yield of 3.64% and AQI 105. And road, expressway, metro transits, and the real estate point of view, it has scored the highest. And in comparison to Mumbai, the growth in prices in Navi Mumbai has been higher to 4.8% growth on the 3 year CAGR, YOY 4.2 and Q on Q 1.3%. These are the top locations. Pimpri Chinchwad, which is also a suburb of Pune. So this also has around 453 projects, 364 developers, a marketable supply of 65,000 units, annual sales of 31,000 units, unsold 34,000 units, rental yield being 3.75%. The CAGR growth over here has been 5.1% last 3 years with YOY 3.6 and Q on Q 1%. These are the major locations based on the ticket size. Third comes Thane, so which has marketable supply of 337 projects with 255 developers and annual sales 16,000 unit, unsold is 38,000 unit, rental yield is 2.99%. So it also has shown 4.6% 3 year CAGR growth. YOY growth is 4.4% and Q on Q 1%. These are the top locations. Then comes Gurgaon, which has now around 178 projects, 108 developers, annual supply of 21,000. Sales is 21,000 unit and unsold of 16,000 unit. So frankly speaking, it has less than a year's inventory overhang because unsold is much lesser than the annual sales. So these are the market which are highly constrained as on date for the supply, because after 2008 we have seen limited number of developer have introduced supply in Delhi NCR. So the supply has squeezed down, and that's a basic reason the capital value appreciation is also higher. Rental yield is 2.53%. So it has shown 9.2% of CAGR growth in last 3 years, 6.1% of YOY growth, and 1.7% of Q1Q growth. These are the top locations. Gurgaon, actually, the unsold stocks weighted average cost is standing close to 4 crores. So it is highly is skewed towards the luxury housing market, and there has been a very high introductions of luxury projects in the recent times. So most of the new launches and sales have taken place in the luxury segment, and that's what is reflected in the number of unit and distribution and annual sales. So everything looks to be above 2 crores segment. Then we have Noida, where we have, it doesn't include Greater Noida, it's just in Noida, which is 15 projects, 15 developers. Annual supply and sales both are very limited, with 2.386% of the rental yield. And Noida has gathered the highest growth because a lot of supply which was available got stuck because of so there is very limited marketable supply. So the price rise in the market has been higher. Across India, I have seen the affordable housing location have shown a higher growth in the prices in the recent times, although people are talking that the luxury market is doing very excellent. It is doing good in terms of absorption, but not in terms of price growth and the returns. So 14.7% CAGR growth last 3 years, 9% YY growth, and Q&Q growth is 1.4%. These are the top locations. Jaipur, we have 311 projects, 246 developer. Annual sales 9,700, unsold 17,000, and it has a rental yield of 3.38%. And it has also shown 7.4% of CAGR growth, 8.3% of YOY growth, and 2.3% of Q1Q growth. These are the top locations of Jaipur. The Indore city has 240 projects, 210 developers, 14,000 or 15,000 units annual sales, and 22,000 units of unsold, 3.53% of the rental yield. And the CAGR growth been 7.5% last 3 years, YOY 5.9, and Q1Q 1%. These are the major locations in Indore based on the different ticket sizes. Nagpur has 401 projects with 334 developers. Annual sales 16,000 unit, unsold is 15,000 units. Rental yield is 3.24%. And it has 3.6% of CAGR growth and YOY growth 3.3%, 0.6% of Q1Q growth. Top location of the Nagpur are here. And lastly, Vadodara, we have 274 projects with 239 developers. Annual sales 5,000 unit, unsold 7,800, rental yield 3.78%, AQI is 117, and it has 5.1% of CAGR growth and YoY 5.9 and Q on Q 0.1%. These are the top locations of Vadodara. So I'm done with the presentations. I'll be very happy to take the questions if you have any.
Thank you, sir, for this insightful presentation. I'm sure that this information provides numerous opportunities for our NRI customers to gain a comprehensive understanding of India's real estate market and opportunities. Now we'll move to a Q&A session where we have received questions from our customers. So to start with, we have Mr. Rawat from US, who is asking which city in India is the best opportunity to be settled in next couple of years.
I would still say that the Mumbai will be because of the investment, infra development, and then the real estate size. So in that, but depending upon like there is a issue of congestions and then the difficulties of the cities also. So based on the choices, he can really choose. But Mumbai, Navi Mumbai, or otherwise like other cities are also there, but when it comes to the real estate cycle point of view, I see the Mumbai is very efficient, both in terms of infra development and real estate market efficiencies.
Thank you, sir. Next question we have from Mr. Bharadwaj, who would like to know about real estate opportunities in Delhi NCR region, especially around Noida and Greater Noida.
Yeah, there is a very limited supply, so this is slightly onto the speculative mode, and which we already seen that last 3 years CAGR growth has been very high, and the rental yield got reduced because the capital appreciations has been higher. But having said that, the productivity prices has got reduced, but uh, my own sense is they can still choose the project based on higher rental yield or the micro market and the nearing completions or completed property from the resale market. So can always be considered based on these dynamics.
Yeah, thank you, sir. Next question is from Mr. Bhupinder. He is asking, is it a good time to buy or sell real estate? Which markets are likely to perform better in the long run?
In fact, I always consider a yardsticks. If the rental yield is good, that means you can hold the property. There's a productivity of prices and the capital value appreciation will be higher. If your property is not giving a higher rental yield and the rental yield is below 2%, then you can consider selling it then because the price growth may be limited. So based on that, he can consider his own decision.
Yeah. We have Mr. Patel asking, I have inherited property from my parents in India. Should I sell it or keep it? Maintenance and rental management is headache.
In fact, the same answer, I would say that consider the rental yield. If the rental yield is upward of 3.5%, 4%, and all those things hold on, there would be appreciations. And which we have seen in the past presentations, the places where the capital value appreciation has been higher, we have seen a compressed rental yield. So that those are the market is to sell. But there are lower price growth, and I would say that, and the rental yield is better. That is where there is a upside which is built in for tomorrow, and then you can consider purchasing a property or holding on to the properties in those markets. So
Great.
past growth in the property prices should not be a yardstick to consider my future. If the past growth has happened much faster, that means capital value has appreciated quite a lot, and there may not be enough value additions available, and the prices may not appreciate as much as. So most of the times, what happens is the price goes up and then there's a stagnancy. The steeper increase in the prices has already happened, then there may be a lower price rises or stagnancy phenomenon. Provided if rental yield is still good, then the prices will go up. Otherwise, if the rental yield as on date has got reduced, that means there would be a stagnancy in the price correction risk.
Yeah. Thank you once again, Pankaj sir, for sharing your thoughts with us. And now I invite Rajat Nagar from our ICC mortgage team to give us a brief understanding on how ICC Bank can facilitate and simplify the process of owning a home in India.
Yeah, thank you, Girish. So, hello everyone. My name is Rajat Nagar. I am a product manager handling NRI mortgage products at ICICI Bank. I will take a few minutes of yours to brief you about the mortgage products, loan application stages, and its key features. So, beginning with the products, we offer a wide range of mortgage products for NRI customers, such as home loans for purchase or construction of residential property in India. We also offer loan against existing property in India. Next, we have loan for purchase of office premises or commercial property for self-use. Balance transfer of existing mortgages with other financial institutions is also available. You can also avail top-up on an existing mortgage loan. And we also have home improvement loans. So coming to our home loan application journey, so there are three stages. So first stage is the login stage. In this stage, customers can complete their loan application themselves by providing basic details and by uploading their KYCs and income documents. The second stage is sanction stage, so where our credit team evaluates the application and takes a decision. Then third stage is, or the last stage is the disbursement stage, where customers submit the property documents, legal technical valuations are done, and disbursement formalities are completed either by the applicant himself or by their power of attorney. Now coming to our features, our NRI home loans are designed to be simple, digital, and convenient with features such as online login to sanction journey. Then you can also avail disbursement without visiting India via power of attorney. We have a centralized mortgage desk for faster processing, simplified and minimal documentation, online post disbursement services, and we also have track my loan facility so that you can online check the status of your loan application. I would also like to share that those customers who are yet to finalize the property can also explore our ICICI Bank approved projects link available on our ICICI Bank website. So there they can search for properties based on the location, locality, and builder projects. To summarize, ICICI Bank NRI mortgage loans are designed to provide a seamless and convenient experience to NRI customers. Thank you.
Thanks, Rajat, for sharing this information with us. Before we take few questions around this topic, I'll request viewers to share your valuable feedback on the link shown on your screens. So, Rajat, we have few questions from our customers. First customer is asking, I have given power of attorney to my father. Can he take loan on my property without informing me?
See, ICICI Bank provides the facility of loan disbursement via power of attorney, but the bank's POA format is only limited to disbursement formalities. So, but customers are free to select their preferred general POA format for property registration or selling purposes.
Okay. Next question is, do you have to have OCI to buy property in India if you have a citizenship in Canada?
For OCI customers, OCI card is mandatory, but in case OCI card is not available or customer has not applied for an OCI card, then we can also collect an OCI declaration.
Okay. Another customer from US is asking, can I buy property in India without traveling to India? I mean, can registration happen without my presence if I purchase property through ICICI Home Loan?
Yes, NRIs can avail home loan disbursement without visiting India. Even the login to sanction journey is available online. ICICI Bank POA format is only limited to loan disbursement formalities. For property registration, customers can execute their general power of attorney as per their requirements and avail the registration without visiting India.
Great. With this, we now come to an end. Thank you all for being part of today's discussion and giving your valuable time to us. We hope you found the insights valuable and thought provoking. We look forward to connecting with you again in upcoming sessions. Until then, please take care, stay safe, and bank on us.